Good morning, and thank you for joining us. It's a pleasure to present the Black Cat story to you, and for those who don't know us, to demonstrate to you how we've become one of Australia's newest gold producers, and for those who know us a bit better, to describe to you our growth plans and how the discoveries at Paulsens set us up well for the next couple of years. I'm very pleased to have Nick Dwyer, my CFO, in the room with us today, and happy to chat with you at the booth after this presentation as well. So Black Cat has rapidly advanced over the last 8 years from IPO to have 2 operations in production today, producing at a run rate of 100,000 ounces per annum. We've got $92 million in cash and growing, no debt, no hedging, and producing from our 2 operations which have 2.5 million ounces at 2.7 grams a tonne. You'll hear me talk a lot about high grade, and as I think most people know, grade is king, and for us we're very pleased with the way that our operations are able to produce highly profitable ounces from high grade operations that we manage ourselves. Over the last 8 years we've delivered shareholders 19% per annum shareholder growth. We're going to continue to grow this company and demonstrate to you over the next few years how the company will not only diversify production but also grow from our internal means and funded by our own balance sheet. In terms of the assets in the company today, we have 2 producing mines, Paulsens and Cal East. Both of them are producing well. Paulsens has now been in production for about 18 months since we restarted. And at our Cal East operations, we are ramping up production from 2 operations at an open pit mine at Fingals and an underground mine at Majestic. In addition, we have the Coyote mine, which is up in the Tanami, which is a development project that we're drilling right now. And in addition, we have an antimony project, which is a critical minerals project, close to our Paulsens mine, and which will leverage the infrastructure at Paulsens. I'll discuss a couple of our operations in a bit of detail. Paulsens I'll start with. We have a significant land holding that we own 100% around Paulsens. The Paulsens mine historically has produced over 1 million ounces of gold, and we continue to find more gold and have recently announced 2 very significant discoveries. Over the last 18 months of production, we've repaid the capital that we paid for the asset when we acquired it, and we're cash flow positive. The mine itself has 3.1 million tonnes at 5.5 grams a tonne in resources. It has a processing plant that can produce, has a processing capacity of 450,000 tonne per annum, and that produces all the gold that we require, about 40,000 ounces per annum. Last week we announced 2 important discoveries at Paulsens. Paulsens historically has produced significant gold, but the 2 trends that we've recently found were unknown about and unknown because of lack of drilling in the hanging and footwall. Firstly, I'll talk about Regulus. You can see some significant intercepts that we've made, 9.1 metres at 9 grams a tonne, 5 metres at 90 grams a tonne. And we've recently developed a drive through there, and that drive, the development drive, was 9.7 grams a tonne at 76 metres. So not only have we found it, but we've now developed through it very quickly over the last 3 to 6 months. The deposit itself, Regulus, is open in up and down dip. It's very exciting for us, and that sort of grade provides us a lot of confidence about not only the near-term production, but longer-term production over the next few years. Regulus itself, also significantly, it's up dip of and near surface and open to surface. So the recent drilling was 13 metres at 5 grams, 1.5 metres at 54 grams, and again we've put recent development through there, 88 metres at 3 grams, and that's a diluted grade that's gone through the mill. So we've managed to discover these and get them into production very quickly because they're near surface and it all goes through our existing infrastructure. And it's this sort of can-do attitude that Black Cat has. The Paulsens mine itself is owned and operated by Black Cat. Everything that we do there is controlled by us. It's our workforce, it's our underground crew, our equipment, and it's that ability to rapidly advance these projects that I think differentiates us from some other companies. About 5 kilometres away from Paulsens, we also have the Belvedere deposit. Belvedere has been identified as at 30,000 ounces at 6.6 grams per tonne, and we're keen to put a few more holes in that later this year to provide an additional source of production to go through the Paulsens mill. And again, it's a highly capital efficient development. It's, once we're planning to put in a decline of about 200 metres, and that should be something that once we've done this drilling, will advance through the next 12 to 18 months. I'll move on to our Cal East hub. At Cal East, we acquired the Lakewood Mill a couple of years ago. We've been doing third-party treatment and recently completed that program. We've got 2 small packages to go later this year, but at the same time, that's allowed us to develop the Majestic mine and the Fingals open pit. The processing plant can do 1.2 million tonne per annum. We've got a 22 million tonne resource at 1.9 grams a tonne, and that has allowed us to not only get into production very quickly through the acquisition of the Lakewood Mill, but also to do it in a capital efficient manner. This is, we have a very significant land holding around the Cal East area, 740 square kilometres. It's 100% owned by Black Cat, and that will provide us significant opportunities to continue to do further exploration, to increase the resources, to increase the reserves, and ultimately to increase the mine life of the Lakewood facility and our production profile. At Cal East itself, a little bit about the mines that we have there. The underground mine at Majestic, you can see there on the screen, we've just started stoping in the last couple of months. We're 2 or 3 levels down in that operation and will continue to ramp up over the next 6 months. Majestic has a resource of 1.4 million tonnes at 4.4 grams a tonne. At the moment, the mine grades are about 3.5 grams a tonne, and we're ramping up. As we do ramp up, that feed will supply about 30% of the Lakewood material. The other 70% of the material comes from the Fingals open pit mine, which you can see there in the bottom of the picture. We've into the first couple of benches of that mine. It's got 3.5 million tonnes at 1.8 grams a tonne. At Fingals, it's open at depth, and we plan to do some further drilling over the next few years to hopefully either develop an underground mine off it or to extend the open pit even further. In addition, we've got the Imperial pit, which sits right next to Majestic. You can see the resource there of 1.6 million tonnes. Again, it's open at depth, and I think this just demonstrates the future production potential to increase the life of this operation. At the same time, there's other leases in the area. We recently announced the Trojan pit. We've got about 4 odd million tonnes of ore in the Trojan pit. So all of these pits will supply the Lakewood Mill over the years to come and allow Black Cat to continue to have significant operating cash flow to continue to grow the business. And part of that growth I'd like to see come from an asset like Coyote. Coyote is in the Tanami. It's a long strike from It's on the WA side of the border, along strike from the Newmont and Mount Gibson operations. It's a very high-grade deposit that was discovered in 1998. It was mined for 6 years, producing over 200,000 ounces of gold, and it's got 350,000 ounces at the moment in resources that we're currently drilling. The advantage of this project for us is that it's fully permitted and it's got significant surface infrastructure. There's a 300,000 tonne per annum processing plant. There's a camp, airstrip. As you can see in that picture, there's a tailings dam, waste dumps, and all surface infrastructure associated with that. So the plan here is to continue to drill out to depth. The current ore body is down to 400 metres. We'd like to extend it down to 800 metres. We've had hits in the past of 0.4 of a metre at 80, 90 grams a tonne. And so that, being very high grade, we think that this is a lookalike for what Paulsens is, which is a fairly narrow vein but very high grade underground mine. In the past, the mine was developed and was very high cost, and the reason for that was it was a very small decline, 4.5 metre by 4.5 metre decline. Because of that, they could only use small equipment in the operation. If we restart this operation, we propose putting in a pit that would last about a year, and from that pit put a new decline into the underground operation. That decline would be 5.5 by 5.5, and as I said, it would be very similar to our Paulsens operation. So we think we could mine that and produce profitable ounces, and the capital investment would be relatively small because we have all the surface infrastructure already paid for. The other asset that we have in the portfolio is Mount Clement. It sits only 30 kilometres from Paulsens. It's a high-grade antimony project with 2.6 million tonnes at 1.2%. The project itself has significant potential to extend at depth and along strike. Here you can see the mine plan. Again, it's a narrow vein underground mine with a decline accessing it. We're considering options at the moment for the scale of this project. It could be anything from 200,000 tonne to 600,000 tonne per annum. At that sort of scale, it would be anywhere from 2 to 6% of the world's market of antimony. And at the moment, we're doing metallurgical test work and customer engagement to determine the pathway forward to developing the asset. Wanted to conclude today with why invest in Black Cat. And the reason is because we can fund everything that we want to do internally from our own cash on the balance sheet and the cash generation from our operations. We currently produce 100,000 ounces of gold per annum. We will expand that over the next year or so as we continue to ramp up Majestic and Fingals. And then we've got options for development of Coyote. And then at the end of the day, we've also got other exploration that we'd like to do on our existing leases and other opportunities to continue to grow this company in WA, in gold, and look at options for what we do with Mount Clement. With that, I think I'd like to thank my board. I've been in the company for 5 months. I've really enjoyed getting to know the business, and I've got an aggressive plan for growing this company going forward. And thank you very much for your time.